Dividend DIY. It's Home Depot versus Lowe's. Which is the better dividend stock to hold moving forward? Let's find out. So as you can see here on the board, we have Home Depot on this column and Lowe's on this column. Now, I'm sure many of you have shopped at both, and probably most of you have a favorite. So in this video, I want to go over all the different metrics that I use to decide which one I wanted to purchase and which one I want to hold long term. So right off the bat here, if we look at share price, P/E ratio is about 22 over here and almost 22 over here. So really, as far as valuation off of price to earnings, they're about the same. And a P/E ratio, all you're looking at is how many dollars do you pay for every dollar of earnings, essentially, is what you're going after there. So another interesting thing, another interesting similarity, I should say, is both of them are about 11% from their 52-week high, which is pretty interesting. As far as dividend yield, Home Depot beats Lowe's. As far as current yield right now, it pays $4.12 a share, which current share price at $191.15 equals out to 2.14%. Dividend yield over here for Lowe's, $1.92 a share at 104 equals 1.82%. So what's very interesting is Home Depot has essentially massively outperformed the S&P and Lowe's over the past decade since the financial crisis. If you would have invested $5,000 in in Home Depot, October 2008, you would have almost $70,000 today, which is a 1,248% cumulative return. Now keep in mind, that's with all dividends reinvested. Same thing over here, $5,000 in October of 2008 would have yielded you almost $40,000 today. Dividends reinvested, which is almost 700% return. So it's obvious the clear winner of the past decade as far as total return goes. As far as dividend growth, though, if we look, in 2012, Home Depot didn't raise its dividend, so it only has 5 years of consecutive dividend growth. Where Lowe's massively beats Home Depot is that magic 55 years of consecutive dividend growth. Lowe's is a dividend aristocrat, and I actually own Lowe's through one of my favorite ETFs, NOBL, Noble, the Dividend Aristocrats Index. So this is a massive, massive reason why I really like Lowe's, but let's keep going and let's look at more statistics here to figure out which one I'll probably own for a while. So if we look at dividend payout ratio, Home Depot has about 45% payout ratio, whereas payout ratio for Lowe's is 35%. So although they pay a little bit smaller of a dividend, it's more sustainable by about 10%, its payout ratio is about 10% less, meaning 35 cents of every dollar in earnings goes out to shareholders, where the payout ratio for Home Depot is about 45%, so they've really been ratcheting up their dividend, which is, of course, higher at this point in time. Although, what I found truly alarming, and I didn't realize it was that much of a difference, is the amount of leverage that Home Depot uses. So they're almost leveraged 30 to 1, so debt to equity ratio 29 to 1, whereas this is honestly, I mean, it's not the best, but it's about 5 times less leverage that Lowe's is using, about a 5 to 1 leverage ratio, so debt to equity ratio. So Lowe's is a little bit more conservative. They have a little bit lower payout ratio, which I like, and they've consistently raised their dividends for about 55 years. So where Home Depot really performs very well is it has more stores in warmer locations, warmer climates, southern U.S., Mexico, California, stuff like that, whereas Lowe's has more stores in colder climates such as Canada, which is kind of an interesting thing, and both of them have about the same amount of locations. And Home Depot has always historically focused more on the pros, right, the contractors and home builders, where Lowe's has been more of the individual DIY, individual homeowner. So, and it's really interesting because when I was remodeling my rental property, a lot of the contractors were saying, oh yeah, at Home Depot, and I never really put 2 and 2 together until I looked at the market share of the pros that each one owns, or each one, services. What's really nice, I think, that you'll see a lot of growth in Home Depot through 2020. They have a lot of really big 2020 financial targets, as well as they just, the board of directors authorized a 15 billion share repurchase program, which I think will help this stock continue to perform till about 2020. After that, I haven't really looked into it. Where I like Lowe's the best is they have a new CEO, and this CEO previously worked as an executive at Home Depot for about a decade, then went to JCPenney, and now new CEO, new CFO from CVS, which is really nice, being later this year. Another interesting thing is Lowe's made a strategic move to close all of its Orchard Supply hardware stores, which about 100 of them, to focus on the core Lowe's locations and the Lowe's brand, which I think was a great strategic move because OSH only accounted for about 1% of Lowe's total revenue. So it was nice to get those stores off the books and close them down so they can focus more on Lowe's. Now, what's interesting is these are consumer cyclical stocks, so you probably don't want to own any of them through a recession because, again, they're cyclical. But if I was to own one through a recession, which I do own indirectly through an ETF, is I own Lowe's. I'm very into dividend aristocrats. I'm very into the tortoise versus the hare. I'd much rather have the tortoise over here paying me every year and increasing it every year than this boom and bust, amazing share growth, because really, how much more can they raise the dividend? How much more can the share price go up when it's already massively outperformed, which has been great. If you were a shareholder of this over the past decade, awesome, congrats. But how much more juice does it have left to go? Whereas the steady Eddie over here raises its dividend each year, doesn't use a lot of leverage, has a lower payout ratio, and new management, and made some strategic moves. So this is the stock that I'll be holding through the next decade, and this is the consumer cyclical out of these two that I'll own a majority of. I'm sure I own this through some S&P 500 ETFs and some other things, but I do have a larger holding in Lowe's, and it is my stock out of those two. If I had to choose, definitely would be Lowe's. Again, these stocks are consumer cyclical, meaning they're heavily dependent on the economy. And what's interesting is Wednesday, so tomorrow, we have housing starts and building permits coming out at 8:30 a.m. Eastern time. And so you'll see these stocks move up and down according to those numbers normally. And again, I know we're late in the cycle as far as the bull run, but I truly have confidence that Lowe's can again take another 2008, because 55 years of consecutive dividend growth, you have to think about that. It raised its dividend in the crash of '87. It raised its dividends through the tech crash. It raised its dividend in 2008. Whereas Home Depot, as excellent as it's been, and I think it's a great concept, and they run a really nice business, it really seems like it has this boom and bust mentality about it. So, if I was a shareholder, I'd probably look to divest a little bit. And if I was a shareholder of Lowe's, which I am, I'm definitely sticking with it. Another reason why I favor Lowe's, and this is a personal reason, is because as a veteran, Lowe's consistently gives me a 10% discount no matter the day, no matter the product, whereas Home Depot only has certain periods of time throughout the year where they give discounts. So that's what's really nice, is if I need to make a large purchase or really any purchase, I choose to support Lowe's because they always support me without any, red tape or fine print that I have to navigate through and only purchase things on certain days. And so a 10% discount is huge. I really appreciate that. And I really respect the 55 years of consecutive dividend growth. And I'm looking forward to dividend growth even through a recession. So with that being said, Lowe's is my favorite stock out of these two. And this is one I'll hold for at least the next 10 years. With that being said, which one do you own? Which one do you like more? Which one do you shop at? If you guys enjoyed this video, definitely consider giving it the thumbs up. And if you haven't subscribed, I want to invite you to my channel. We have a very rapidly growing community, so definitely consider subscribing. I try to upload about twice per week. So I upload stock videos and personal finance videos and all sorts of different financial strategy videos. And I share things that I'm doing in my financial life, and maybe it can help you and we can grow as a community. So with that being said, thank you so much, and we'll see you next time.